Good morning, everyone. Hope you're doing well today. We're going to open up right about where we closed yesterday. Most of our overnight trading has been above the gap from the prior day. That's one helpful thing to look at. It's as we form the overnight session, one thing I'll pay attention to is how much time was spent above the overnight, the gap from the prior day versus below, or if we're just very flat and even. And then, as we often do, we'll just mark the overnight high here. And then another thing we'll want to do is take a look at how close we are yet again to all-time highs. And so that's going to be a 70.43. And the interesting thing about this all-time high, or that 70.43 all-time high, is that it did occur in the overnight session, if you remember going back to last week. And that's pretty uncommon to have a high put in, especially an all-time high like this, so that high put in the overnight session, that does not trade in the regular trading session. Sometimes, if we're trading in the overnight, let's say yesterday's overnight session last night traded lower and we traded down into yesterday's range. Well, there had been trade there during the regular hours. That's this, volume spike here. So if we had traded lower from yesterday's price level, then you're just sort of trading back where price was earlier in that day when we had more participants. When we make a new all-time high or a new high in the current trend, and that occurs in the overnight hours, now we have new territory, price action being traded by a very few number of traders relative to the regular trading hours. So in order for that level to be validated with the masses, if you will, it needs to push up. Oops. So as we don't have much of a gap today, we'll see what we get. Potentially a JOLTS number at the top of the hour, so we'll watch for that. Yesterday had a pretty strong uptrend. Weren't a whole lot of moves in the range yesterday, but if we go to the SPY chart here, I guess it's not as depicted as clearly as the ES because we had a little bit of a gap down yesterday at the open. Filled the gap right away and then just continued to run. The SPY chart. Actually, you know what? Yesterday at the close, we spiked down super out of range, and I removed the bar so I could see it. And typically, when you close your Thinkorswim charts and reopen, that bar will reappear, and the error, in this case, it was an error in the closing price, that should reset. So for some reason, it did not. I'm not sure how to bring that bar back. So this is actually Friday's bar. And Yesterday's bar is not visible. I'll have to find that later. Not a big deal for now, but anyways, this is what more of what it should look like. Okie dokie. Yeah, the reason VUG is not at all-time highs is because there's a lot more tech in that fund. I actually sold a little bit of the VYM today just to transfer. So I used VYM as more of a dividend fund. I use that in my HSA account, and got some dental stuff that I'm going to have done. So sold some shares in there to pay for that. It is super nice with the, I know a lot of people's health insurance is a little bit goofy right now, but having the HSA is pretty nice. Some pretty big candles right off the open. This is borderline hammer. The body itself is is less than a third of the full candle. It's a little bit low, but I would be okay leaning towards calling that a hammer. Candle's pretty big. I'm just giving it a few more minutes to kind of settle out. Yesterday, we had a pretty early hammer, not quite this early, but we came up to the 21, went right through it, and pulled right back to it. And so it's going to make it really big. But at this point, we had a nice little pullback, uptrend off the open. And so getting long above this hammer. It was still, these candles yesterday were still kind of big. This was 5.25, but a nice pullback, touch to the 21 in an uptrend, and rallied from there. I had a couple comments in last week's video that sometimes when I'm zooming in and out on my charts, it moves a little bit fast. So I'll try to slow that down a little bit. Yeah, Daryl, usually you can correct those bars. And for whatever reason, yesterday it wasn't letting me. So not a huge deal, but yeah, same deal as you were seeing. So this is our gap from yesterday. Now that we've filled it, we can get rid of it. It is kind of handy. Actually, I'm going to take this off and put it on the default chart. And I know sometimes it seems like things are moving super fast. But I know a lot of you are on Thinkorswim and have been using Thinkorswim charts for years. And yeah, you become so comfortable in where things are at on your chart visually. Your eyes can kind of just, your eyes and cursor can just go right where they need to. Same with the trade ladder. It's almost by feel. You keep the same monitor size, resolution, and you keep things in the same spot, and it makes it much easier to manage trades. That's for sure. So yeah, this high in the overnight is still lower than the all-time high in the regular trading hours, and then the overnight session from last week on the 27th, 28th is even higher at about a 41. So we're coming off yesterday's big bullish move and this higher low here. We did dip into the 50% and then rallied kind of off that 61.8. So we certainly have projecting up, can easily make it into well beyond that 70.41 on the way to the negative 23. So we'll see how that plays out. This hammer here, nice clean hammer, but look what's happening on the structure of the swing highs and swing lows. Got the high for the day, and then if we just follow it down, lower low, lower high, lower low. So this hammer is in the context of a downtrend. And if you're, not looking, if for some reason you weren't paying attention to the swing highs and swing lows and you just glanced at the chart, you also have a fairly flat 21. So I'd like to wait for the market to kind of break one way or another, not necessarily into a new high on the day, but breaking above this prior swing high or below the prior swing low could give us a bounce to a 21 inverted hammer short, with that 21 being in a downtrend. So, if you kind of project out, if we were to come down and make a new low down to like a 98, well, then this 21 is going to get pulled down. We're going to get, a lower high scenario, and we can take an inverted hammer down near the current low. So you're always kind of thinking a few steps ahead. If we can break to the upside, then taking out a swing high, forming an uptrend like this and a pullback to that uptrend is what we'd be kind of looking for. And these candles, yeah, we're still in the 5-6 range. This slight, I don't want to say more volatility because the VIX really is still pretty low, but the ranges of these candles, the size of these candles does help make it's kind of twofold. The larger candles help give larger drawings on the 512 tick chart. They kind of extend the size of the fib retracement because the highs and low anchor points are higher and lower. But then with a little bit more volume, they give more 512 tick bars within the trend as well. So if you're just looking at a 512 tick chart and looking at, okay, we're coming down, lower low, make a lower high, make a lower low, and then we come up and break this swing high, now you have more room and more time to draw up a 50% retracement over the course of, this is like 38, 39. So now you've got like a minute and a half of this bounce and pullback starting to form. It's a little bit wider range. It's still not super big, a 7,003. And then up here, you're about 7,004. But my point being, if your fib drawings are super tiny like this, it doesn't give you as much room or as much time to get into a trade like that. Okay, now we're getting a little bit of a drop here. I don't show. Let's see. Yeah, I just show a jolts at the top of the hour, so we'll see what comes about here. But now this 21 is going to get pulled down. We're going to get, if we can get a couple of bars down here printing before just ripping right back up, we can maybe get a lower high put in. This is the kind of stuff that you're seeing a lot more due to, at least my thought is, due to the algorithms that are pulling or targeting specific words from like a Fed speech or something on Twitter or something coming from the White House. Okay, Mark says Fed speaker at 9:40 here. I didn't think Jerome Powell speaking. Could be one of the other Fed chairs or Warsh maybe. And so that's something that's been, I've talked a lot about not needing to sit there with CNBC on and follow the news all morning long. But some of these algorithms now are pulling, word triggers as opposed to price level triggers. The high frequency trading, that's old news as far as just putting on lots of trades, big size, putting them on, taking them off, putting orders out there, and then taking the order off as soon as price is just about to reach it. That's why time and sales blocks are not as useful anymore to watch the ticker tape, because there's so many orders that are pushing through. And while those time and, I guess, again, twofold, the time and sales are the actual orders, but those orders get broken up a lot more into different chunks. And, it's just, there's so many orders coming through, you can't pick out, a 1,000 lot order. It's going to be, tens and 20s and various smaller chunks. And same for the watching kind of the bid ask. You get these big orders sitting there. And if you're watching your level 2 on your trade ladder and you see, big orders above or below where price is, and then by the time price rolls to it, it gets removed and that order doesn't get filled. And then in some cases, the algorithm is kind of pulling price down to it. And then instead of buying up that low, price falls to it. And then the algorithm can push one or two big orders through to kind of break a swing low. And if there's no buyer sitting below it, then it can get, a bigger spike down, almost like this bar here. It came down and broke the tail of this inverted hammer. And, the order started up here by the 21, and then it accelerated through. So the order gets put on. There's not really any buyers. It breaks that low point where there's typically stops above or below a swing high or a swing low. And then it can keep falling. That firm can, then be done with their big order. There was no more other sellers waiting to push the market lower at that instance. And then we just kind of rally back up. So it looks like, president of the Richmond Fed is speaking. All right, so we made it back up to the 21 here, but in the 50%, but not really in that downtrend anymore. Our 15-minute orb is going to be our range for here as well. So this is our 15-minute candle, 95.50 and 17 and a quarter. And I'm getting super close to having this. So I've been working, like I said, with a managed futures firm out of Chicago, big firm, and they manage, just like the name says, manage futures accounts, trade. They have different strategies that they run. You open a brokerage account with them, fund it, and then essentially select the strategy you want them to trade, and then their trade desk puts in the orders. And so for something like the 15-minute orb, yes, it's simple enough to do yourself, but the nice thing is they're going to do it every day, and you don't have to worry about missing days. And if you get unlucky and that day is a winner, then you're out of luck. So I like this here for we just are technically we didn't break the swing high, but we've got this nice kind of bull flag off of lows at the 21. Let's see if it turns into a hammer. It's going to end up being right at the top of this range, but actually it would be nice if this wasn't a hammer and then we go a few more bars to break the swing high. If we get a hammer here, we're just, again, right at the close, kind of moving sideways. So so that they've been trading the 15-minute orb the last couple of months with their real money. We've already gone through the last 5 years or so of trades and kind of mapped out the best course of action, sticking with the -4, and then if volatility goes above, if the VIX goes above 25, then we want to go back to the full candle, giving it some more wiggle room. Nice pull back to the 50%, but my concern is that we have not broken a swing high. We've got lower low, lower high, technically these are two inside bars, lower low, lower high. So this is going to have to be a no-go for a hammer here. If we do push up, then this becomes the swing high to break, and we can just get long on kind of the next pullback here. Actually, this is going to be right at a 50%. And our halfway back of the day for a crossover is going to be, again, breaking this. So yeah, this 7,009 level is going to be very key. If we can break that, we should be able to push up to highs of the day. Yeah, first I was searching for like some kind of automated program to put the orders in for me. And that stuff does exist, but it's kind of nice to have a real person overseeing things and placing the trades and sitting there, while I'm not there. Not that there's much to do, but just that's what they specialize in, is managing futures accounts. So yeah, once that, so basically you put, I think we determined $15,000 would be kind of the base for trading an E-mini. That gives you, cushion, drawdown, all that stuff. And then you just have a small fee off the small monthly fee to have it automated. But from a percentage standpoint, if you're doing 400 to 500 points a year, that's say roughly 20,000. I mean, even if you did half that, let's say you made 10,000 on a $15,000 account, percentage wise, that's a huge percentage. We don't really pay too much attention to percentages with futures, just because, if we've got a $500 intraday margin, let's say you're trading the halfway backs with a 2-point stop, and you have $10,000 in an account trading 2 mini contracts. Your leverage is so great that the percentages aren't as meaningful. You say, oh, I risked $200 and I made $400. I made 100% on the trade. Well, $400 isn't that meaningful. So therefore the percentage gain isn't super meaningful. Technically here we did put in a higher low off of this low, but not breaking this swing high before the fall is really key. So there goes the orb to the downside. We'll see if it can hold. Yesterday it broke to the downside or broke to the upside, pulled back into range, and then stopped out. So today is technically another filled gap. So we'll see what that ends up doing. But nice thing about the -4 stop is your bracket order just pushes it out there, and you don't have to worry about adjusting after the order goes in. Today would be the midpoint of the candle because it's larger than 20 points. But yeah, you could have a whole week of -4s and then Friday get a +20 and still end up positive on the week. So good R multiple over the long run, good return. So there are some drawdowns, but nothing too serious with the -4 especially. And I think I was just looking at it, using the -4. Back when I first, actually, funny, in 2021, you would have had January, February, March were down months. January and February were just ever so slightly down, like down $100, 2 points. But that was the longest, 3-month drawdown streak. Okay. So now that we're almost to the top of the hour, that jolts will be coming out here. This is our 15-minute low. We'll be able to mark our 30-minute low here in just a minute. Just wanted to see how much we went in. 2 points. Yeah, when we gap up at highs, I sold that a few shares of that VYM on what I was deeming the gap up at highs today. Not that it really matters. Basically, for if you have an HSA account with investments in it, it's going to function as the same way as a brokerage account. You own a fund, you gain interest, or you gain the dividend. Um, in my case, the dividend rolls off into a cash account, but you can have it reinvest as well. And then we still contribute. I think this year it's up to like 8,700, 8,750. I want to say is the yearly contribution. So you can basically dump almost $9,000 into it tax free, and then have that grow, and then use those funds for medical, dental. In some cases, there's certain things that you can purchase that are uh, approved. HSA. What's the other one? Not flex spending. It starts with an F. Yeah, flex spending. There's another one that the funds you kind of lose them at the end of the year, but yeah, that HSA is a super nice plan. If you're fairly healthy and you're not doing a lot of medical trips. I mean, even still, I mean, it's a moderate deductible, but we had to run our daughter over to get a steroid injection for a cough. And yeah, you go to the urgent care or something like that, and it's still going to be a pretty big bill. 500, $600 just for a visit, whether you have a PPO with low copay or not. So I like the idea of having the control of the funds, and then with the HSA, you can use it for. I'm having a bridge redone here in my mouth, and so that's you can use the funds for that. If this hammer would have bounced off of lows, that is considered a counter trend trade rather than, in certain instances, I'm okay getting long at lows like that above the hammer. But if we let this bounce a little bit or form a double bottom or form a higher low, that's going to give us a better chance of getting the lift off. But at this point, looking for a move up to the 21 to enter a short would be a better play. We're almost at, what is it, 95? Yeah, I just got to go another 5-10 points for that 15-minute orb already. Oh boy. Okay, here's that JOLTS number. There goes our 20 points on the 15-minute orb. So that's nice. And let me get this moved. That was just the 15-minute low I had marked there. The 30-minute low is going to be right here. Okay, so 15-minute orb already made its 20-point move. And now we look for a short in the downtrend. Just wrapping up that conversation. VYM is what I have in my HSA. It's more of a dividend fund. I'm not, growth is great, and obviously this has grown a lot, but the dividend is more valuable to me in that HSA account. And then VOO is what I use in my brokerage account. That VOO fund is kind of earmarked as my daughter's fund. Then also in that brokerage account, I have my own VUG, which that way it just kind of, by having the two separate funds, it's like, VUG is my fund, VOO is her fund, instead of having to have separate accounts or 529s and things like that. I like the flexibility of being able to use the money for whatever, maybe she wants to go to, I don't know, mountain rescue school and learn to be a helicopter pilot. 529 might not cover something like that. So, but yeah, VUG has a lot more tech in it. And so that's why it's more, it looks a lot more like the NASDAQ as far as the growth trend. And so then in my retirement account, I have VUG, and that's really it. I don't get too fancy, retirement account. The brokerage account is nice, especially if you're below, if you're younger than 65 and a half and you think you're going to retire at, 45, 50, 55, where you're going to need 5 or 10 years of access to funds. I mean, if you have a rental property or if you have some kind of income to cover those years, passive income, that's what you're looking to fill in those years before you're pulling from your retirement account. And so, yes, you hear about some of the tax disadvantages of a brokerage account, but by the time you do the math on putting more into it versus putting it into an IRA, depending on which IRA and pre-tax, post-tax, at the end of the day, the more you put in, the more you're going to be able to pull out. So our 30-minute low is going to be a bit lower than our 21 on this bounce here. So if we trade back into the 30-minute range, which is a fairly wide range today, we know that if we trade back into the 30-minute range, then just by definition, we become range bound, and it can be a difficult place to be because the market's just chopping around. However, with a big range today, that gives us a lot of room to go from the bottom of the range to the top of the range. At this point, it's a lot less likely because the range is so big. But let's see what this inverted hammer turns into. I don't love always when you come off one big green candle. So it's one candle and then the inverted hammer. This is the trade I took on Thursday that I was stopped out, but being at the 30-minute low, I'm going to give it a shot. 75 and a quarter. Oh, 7. Okay. So it ended up being, yeah. Oh, that is right. Okay. Closed at the low and filled at the same time. Nope. All right, so that one is going to take us back into the 30-minute range now, I bet. The body could have been a little bit higher with the tail sticking in. I'm content with that trade. As I was looking at it, I'm thinking, well, if you wait for for it to tag the 21 in this case, you would need the body to be down here. You would need to come up and tag the 21 and then retrace to the 30-minute low. I guess that would have been an ideal scenario. But now look at the rollover off of this. Technically, even though it's green, it's a bearish engulfing candle. I'd say that's just a little unlucky. I don't have, maybe I just make a hard rule about the signal bar can't be off of one candle. See how this green candle is the lowest of the low, even though it made a fairly decent bounce. That is what burned me last week on on Thursday, yeah, where it was one candle up and then the inverted hammer. But coming up right to the 30-minute low like that and being rejected, I'm okay with that. Just a little bit unlucky to get that second inverted hammer and push down, but I'll make a note of that in my log and go do a little reviewing of some of the other trades that I was, well, just all the trades, but specifically the ones that were stop outs and see if there's any pattern there with, being one rally candle and then the inverted hammer. It's definitely twice in 2 weeks that I've been, I get burned is not, I took a stop out, I guess you're burned, but burned kind of gives you a bad connotation, I guess. You don't want to have this mindset of, I had a winning trade, therefore it was a good trade. I had a losing trade, therefore it was a bad trade. You could have a winning trade, and like I could just hit the buy market button right here, and we could rally 5 points, and I hit flatten, and that's a winning trade. It doesn't mean that's a good decision, a good quality, repeatable trading strategy. And at the same time, I could take a, beautiful inverted hammer at the 21 and, 6 or 7 out of 10 might stop you out, or 3 or 4 out of 10 might stop you out. Only 6 or 7, going to go for the profit target. So kind of disassociating yourself. That's one of the key themes in Annie Duke's book, Thinking in Bets. So at this point, Richard, let's see. So, hang on. I got 2 different questions here. So, Rick, you're asking about, let's see. Yeah, on my trade log, if you go back to last year and you see on the 15-minute orb strategy, if you see P&L for the day that's larger than 4 points, that's because last year, for a good part of the year, so I started with -4 at the beginning of the year. Then I switched to the full candle, maybe, I don't know, 4 or 5 months in, and just stuck with the full candle for a while. And then starting 2026, I went back to the -4. And so if you see -11, even a -20, there were a couple days where we had like a 40 or 50 point candle. And so the max stop I'm going to use is 20 points. And so that's why some of those stop outs were larger than 4 points. And there should be an annotation in there that says, switch to using full candle in the notes section of it. But yeah, and it's all divided down. So it's as referenced as one contract. So if you see a -4, it's for one contract. Let's see. And then Richard, you were asking, the entries and exits. Yeah. So if you're trading on Thinkorswim, you can have not only you can have your trades show up, but you can manage the trades by clicking and dragging, which is, it can be nice. Sometimes if there's a lot of movement, it's hard to get your price exactly to the tick where you want it. You can do that in Tradeovate. So like that's where my trade ladder is. That's where I'm executing the orders. And you can do that on the chart. You can either turn it on or off, but you can't have Tradeovate orders show up on Thinkorswim or vice versa. Like you can't link them together. So continuing this series of lower lows and lower highs, we have not, other than this little higher low here that was immediately rolled over, we did not break that pattern. And yeah, just a little unlucky with this kind of bearish engulfing inverted hammer that, yes, did form green. That was a little just unlucky. But 15-minute covering the down move. So, and then, yeah, Richard. So as far as, the Capital Trading Group is the managed futures firm, and they execute on through CQG, which is probably the biggest, most long-standing order execution platform out there. And so you would open up an account with them, a brokerage account there, and you essentially give them the right to place the trade, run the 15-minute strategy for you. That way you don't have to be there. Or, you can still be here trading the halfway backs and the hammers and inverted hammers. You just don't have to worry about the 15-minute orb. And if there's some days where, I'm taking a long weekend, I've got an appointment, can't trade on Thursday and Friday of such and such week, then at least the 15-minute orb is still being traded. And, like I said, you miss a Friday and it happens to be a plus 20, that makes, it only takes a couple of those to really throw off your P&L at the end of the month. Sure, you could not trade one day and, miss out on a -4 too. But the fewer the setups you get, the more each trade is important to take. If you're trading, I guess halfway backs aren't the greatest example because right now there have not been a whole lot of them. But let's say you were taking just trades on the 512 tick chart, and that's all you were looking at, or some strategy that gave you 30 setups a day, and you could just pick, the best 10 or what you deem to be 10 of the best trades. Then if you miss a day, if you miss a few trades, there's so much frequency of trades occurring, it's not a big deal. If you're swing trading and you're taking one trade a month, well, if you miss one of those trades, that's 11 out of 12. Now you have 11 trades instead of 12 for the year. So I don't know the commission rate, but it would be pretty cheap as far as you've got the um, standard exchange fees and things like that. So it's pretty much as cheap as you can get for placing the trades. So don't think of it as there's a trade desk logging into your account and having to put on the 15-minute orb 50 times, for 50 different people. It's, they have one. So let's say there's 50 people that want the 15-minute orb traded. They put on one trade of essentially 50 contracts. And then that, gets dispersed into the different accounts at the end of the day for, the P&L is broken up and things like that. And you might say, oh, well, what if there are 200 people? Are you going to get slippage on 200 contracts? Now, you're talking, I mean, just pick any one of these small bars here. This is a 1-minute chart, remember. 5,564 contracts. 9,700 contracts. I mean, there are so many contracts traded. And even if you tried to put on 1,000 lot order, let's say you got 500 of them filled at one price and then 500 of them filled one tick lower, the difference between 20 ticks and 19.75, or 20 points and 19 and 3/4 points, it's negligible. It's not like you're taking 2 ticks out of a trade, and if you miss one of those ticks, it's 50% of the P&L. Yeah, so they'd be trading it, or they have been trading it exactly how I'm trading it, with the -4 stop. If I'm stopped out and we break the other direction, then they would take the other direction trade. All the same rules: not trading on FOMC Wednesdays, not trading expiration, all that stuff. So that's what they've been practicing, if you will, the last couple of months with real money. And I've been in talks with Jim and a couple of the other guys at the trade desk, and Nell, the gal who's head of it. So let's see if we can get an inverted hammer here and try the short one more time. We're getting a little bit flat, but still lower low, lower highs. A little bit flatter in the down swing, if you will. It's a 70, but it's not an inverted hammer. Nope. Okay. Now, not surprising. It would not be surprising if we started to lift off and trade back into the 30-minute range here, because yesterday we saw, not yesterday, a couple days. Yeah, I guess kind of yesterday, towards the middle of the day, we started to lift off and move higher. And then it was Friday that we had a strong sell off and then just lift off higher into the close. Yesterday's long, or Friday's low came down to the 61.8. Yesterday's low came down to that same fib drawing, but to the 50%. I guess if we look at today, you're kind of almost at that 50%. So yeah, it's not so much that the 15-minute orb, like I said, is a difficult execution strategy. The benefit is more, you can, if you want to go play golf, you go play golf. If you want to sit there and just focus on the halfway backs 3 days a week, you can do that. Or, you still want to be there 5 days a week, just being laser focused in on a different strategy, and the 15-minute orbs just kind of running in the background, you can do that. So that's the idea. I mean, honestly, even if nobody else is interested in having it automated, it's nice for me because then I can just focus on the hammers, inverted hammers, and the halfway backs. And yet, even though I'm here most days, there are certain times where stuff does come up, especially with kids. Sickness and other things do come up, and so that's true, Rick. If you have in order, so if I have one account and I'm short the 15-minute orb, let's say I'm short one contract, and then I get long a hammer, one contract. Now it's going to show I have 0 contracts. I'm flat. So trading it in one account, you can do that. It just takes a little extra mental fortitude to remember which trade you're in, if you will. So I've always just had a second account that the account is just for the 15-minute orb. I have an account that I just swing trade in, and I don't day trade in that account. It's just swing trading, typically stocks and options. So it's not a futures account, but having I'm fine doing the halfway backs and the 1 minutes in the same account because I don't double up on those. But yeah, the 15-minute has always been its own account. And then also that way, when my friend Justin and I would kind of tag team, same thing. He would have his 15-minute orb account. And so if I were to log into his account, then I'm only, even though we trust each other, it's like if something goes wrong, you're only goofing up one account, and you can have specific loss limits for that one account, and just a little extra safeguards. Now, I believe you can segment funds within an account in Ninja in Tradeovate. I don't exactly know how to do that, but I think that is an option as well. So you would technically have one account, but it's like the funds are broken up. So yeah, if you're using like Top Step or something, you can have a whole bunch of accounts. So that's not a big deal. Yeah, simpler the better. I was just laughing with my wife about this reading program thing for my daughter, and it's 2 pages of instructions on how to read this book and the certain ways to call out certain words and whatnot. And I'm sure it's a great program, but it just reminded me that if something is too complicated, you're not going to do it. There's a lot of great task programs out there, list programs. For me, I just use Notepad. Super simple, like literally the Notepad on my computer and a stack of Post-it notes. It's simple. It's what works for me, and it's what's going to allow me to do it. Same with typing my trades log up in Excel. Yeah, it's a little more hands-on, but for me, I like it that way. You can also just download any of the online apps and things, trade logs, and have your trades automatically pulled in at the end of the day. and spit out a whole bunch of stats, and that's fine too. Whatever is simple enough for you to use. A couple nice touches at the 21 here, but not really an inverted hammer, unfortunately, and not even a halfway back. And I mean, it's about Groundhog Day, as we had yesterday. We get up to all-time highs. We either break out by a couple of points, we fall back down. Not a lot of activity intraday, not a lot of setups. I know I've talked to a few of you over the weekend and yesterday, and seeing similar thing. I talked to my friend Peter, same deal. Not seeing a whole lot for quality setups, and the last thing you want to do is jump ship and go searching for another strategy, because 2 weeks later, when you're working that new strategy, you can look back and all of a sudden strategy A is giving you a whole bunch of great setups. So um, you just got to have the patience to sit through the slow times. And last Thursday was a really good lesson. You know, I got a little antsy there. Monday, Tuesday, and Wednesday is basically sitting on my hands waiting for that Fed meeting to get done with. And then Thursday, I was kind of itching to get going, and um, just got a little too antsy and should have been a little bit more patient. At that hour mark, tend to see a little bit of a bounce, but still have not broken a swing high, really. We've got this green bar is technically a higher low. Well, is technically yes, because we broke this little high, but we will also want to wait the swing high before the downfall or the rollover, if you will. So you kind of start from, we just go back a little bit, lower high, new low, lower high, new low. This rallied, but these are inside bars, so technically this is the lower high, new low. Come up, you make, so here's the low of this green candle. You make a higher low here, but this push up is not enough to break the prior swing high back here. And so this is kind of a weak, more of a consolidation, and then just rolling over, resuming that trend. Yeah, I thought about doing a meetup. This week is the Waste Management Open, and there's a couple of, I don't think anybody looking down the list, I don't think it was anybody in the room, but a few people reached out and said they were coming out for the Open. And I know there's a fair number of folks who live in, Chandler and Surprise and around the Phoenix area. Maybe we'll do a coffee meetup or something in March. Just sit outside a Starbucks or something like that. I've done actually I've done a couple of those with just mostly small groups of folks in the Phoenix area, but I could put it out to put it out to everyone, and if it works for you, happen to be out here or need an excuse to get out of a cold wintry spot. Yeah, it's been a few years since I've done the Traders Expos. Those were nice places to meet up in person. There is one coming up in February, but I had some conflict with that. I think I'm going to have some visitors that weekend, and it was going to be Monday or Tuesday or something like that. For whatever reason, I wasn't able to attend that one, but There aren't as many anymore. Maybe just New York and Vegas. I haven't looked at the full schedule. They used to be all over. Did a bunch of them in Chicago, Vegas. Went to New York once for one of the expos. I mean, yes, it's a lot of work to give a presentation, across the country, but I think more valuable is just meeting people face to face and talking trading and environment with a whole bunch of traders is always fun. Yeah, so if you're going through that trade tab, Dale, you got at the bottom of the Excel or Google Doc, look for. So I got the halfway backs, and then the 1 minute that's on a separate tab, and then the 15 minutes, those are on a separate tab. That way we can I keep things grouped together. Ooh, shouldn't have been looking over there. Little now we've got this higher low. Now we've got this triangle forming. My guess is we kind of base here and maybe make our way back up to the 30-minute low. Let's see if we put in a higher low. Really, that should have been a short entry, but you look away for just a few seconds and but yeah, on the different strategies have different tabs on the bottom in my trade log there. And then if you go back, the year is next to it. So 15-minute, 2026, 25, 24, 23, 22, 21, going back 2020, you can go back and see the different years for those. But well, I'm not so sure about just taking a sell on the 21 or a buy right at the 21. It's a plausible idea just with the way the market pulls back and then tends to roll over or bounce at the 21. But, if you go back in here at the morning, like, where do you put your stop? If you use a 3-point stop and you're in, if you say, okay, well, the market has to be trending. Okay, well, that'll eliminate, a lot of this noise. But even so, like, it comes to the 21 here, and then you could probably get away with a 3-point stop, but do you enter? And you might see one or two instances where it touches the 21 and rolls over, but it's nice that you'd be using a limit order. But I'm not so sure about just buying it outright. Yeah, that was a nice little inverted hammer there. I just happened to be looking away at the other screen answering questions. That's okay. See if it forms a higher low. And if it does, technically this triangle is still in the context of a downtrend. So it should resume to the downside, but the pattern for the last week has been have a fairly steep sell-off and then late morning, early lunch hour, turn and start to move higher. So that'd be the pattern I'd kind of be watching for. But yeah, that plenty of room to go from the low of this inverted hammer at 65 down, even just to get your 6 points, you wouldn't even have to come all the way down to this swing low. But that's probably just as hard as the skill of being patient is, being focused. And you start trying to do too much, or start looking at the news and things like that, and all of a sudden, boom, you're missing setups. And in this environment, yeah, you miss one or two setups and kind of blows your whole day. But it's all right. We got the 20 points on the 15-minute, so it's still a good day. Okay, so a lower low immediately bought up. We had that low tick, but that was at 43. And then we made a lower low. So more likely, what was this? 25, only 13. Yeah, so we've had definitely in a tick divergence environment. $64.50. Yeah, missing that 6 point there kind of makes it difficult to go counter trend. I typically like to go, take the first trade on the touch of the 21, try to get a couple with the trend and get a few points on the board before going counter trend. Yeah, it's a double whammy there. Yeah, you take the +6, and now you're +3 as far as the inverted hammers go, and then you can afford to take the risk on the counter trend, and then now all of a sudden you're +9, and that really turns the morning around, at least for that one strategy. But oh well. That's part of why I don't do the room 5 days a week, but that was more my goof up than anything. But yeah, that's pretty much the strategy in a nutshell. You're either taking with the trend or counter trend, and looking for those hammers and inverted hammers. Again, really no halfway back after the, so here's the most recent swing high, and you get this little pullback here. Just barely made it to the 50%. But the hammer is definitely the more optimal entry there. So yeah, plus 17 on the day as opposed to plus 29, but not going to let it bug me too much. At the end of the day, it's your own, it's my own responsibility to take responsibility for our trading decisions, our actions. Even if I'm following along with someone, or if I'm trying to execute a strategy, whether I do a flawless job or a poor job, I always want to come back and ask, okay, what worked and what didn't, what mistakes did I make, and then keep that mistake log so that you try not to make those same mistakes over and over again, and then strengthening your mental side of it to disassociate with the emotions as they come up. Disassociate with the emotions as they come up, so that you can, continue to think clearly and move on from one trade to the next without carrying baggage from the prior trade. And yeah, what would have been a solid day in the inverted hammers, it's just going to be a small down day here. But you can't, each day, each week, new day, new week, fresh start. And you want to be able to start fresh each day without carrying baggage from the prior day. And that's just as important. So a 74 would be the halfway point between the 21 and the 50, or the 30-minute low, give or take. And we're going to be probably end up at 50-50 here, where we've got halfway back long. It's going to be a 71.50. I give that, see if it can come up to the 30-minute low one more time before getting resistance at this 50%. Gonna need a little bit of luck here, though. Push through it. Needs to bust through that 61.8. I don't want to see it retracing. Needs to go straight back to the 30. In one push, 30-minute low right here. Sweet. Push. Come on, little guy. You're right there. It's literally right on top of the order. Come on. There. Sweet. All right. Well, a little redemption. Would have been nice to catch those other two. Nice little, I don't know, half hour. All right. I'm going to end it there because that, for getting a little bit of unlucky, got a little bit of lucky as well. This is nice when it comes to 21 and it lines up with the 50% retracement. Nice strong push for a +6. And then, same thing down here. The counter trend, like I said, typically I lean on the trades with the trend first. And then if I've got some points on the board, so to speak, go with the counter trend. But since I did not take this short, then I missed that +6, and then it caused me a little hesitation to jump in on the slightly riskier counter trend. So, but this setup is pretty much textbook, where you have a strong green move, pull back a couple of candles, and then you're trading roughly at the 50%, which also happens to be the 30-minute or the 21. And then the distance, what I calculated was the distance between the top of the candle, about 71, up to the 30-minute low, 79, 80. Yeah, it's right at 80. So you've got more than 6 points before you're going to be met with that resistance. And so now you're going to be a little bit pinched. You've got the 50% long trading that has a target above the 30-minute low. And then the 21 is kind of bisecting. That'll be at another 50%. And so shorting here, it's a little bit riskier because you've got more support levels closer. I did draw up this halfway back short like this, but since the halfway back long had traded first, I put more weight on the long with the 21 as well. So, but it's a little bit of salvation for me there. But you can see, like, when the market is starting to give some good movement, good clean setups, nice clean swings here, focusing in on those moments and continuing to trade in those periods is much better than trying to trade, through, this kind of stuff right at the open, where the 21 is more flat and you're just haven't quite. We started doing the lower lows and lower highs, but really didn't get a trending 21 until a little bit later in the morning. So, and like I said, I'll go back and look at a bunch of my trades. This one candle reversal and then getting the inverted hammer to resume the trend. It's been a couple times now that it's burned me, so watch out for that. Nice little pattern here, but again, the 50% long and the 21 are going to be pretty close. But that double top pattern with the cluster swing low down here, this is a really nice pattern on the 512 tick chart to get the double top and then dip below the swing low in the middle. So it'd be nice if we could see more of this. But for now, yeah, I'm just gonna can it there. And let's see, tomorrow, what do we have tomorrow? ISM service index, PMI, that's at quarter till on top of the hour. Jobless claims Thursday. Employment, consumer sentiment Friday. To check on what other earnings are coming out this week, but yeah, hopefully some of this stuff continues, and certainly hope the 15-minute orb breaks like that continue. I'll take that every day. Anywho, if you have questions, shoot me an email or drop a note in the Discord. And I hope you have a great rest of your day. We'll talk to you all soon.